And here comes the reaction. Let's see if we get anything on core PCE. All right, and Nas up hit, just tagged 14,000 off the rip, and then immediately gave that back. Gold down here this morning, back underneath that low, that or not the low, but the that 1950 mark. We're into the 1949 here. Currently, U.S. oil trading up just slightly, and there goes gold. Well, my goodness, look at this reaction, you guys. This is a crazy candle on gold. We just spiked down a couple of dollars per ounce and then just right back up. NASDAQ is staying flat. Dollar jolting around, but not really quite moving substantially one way. It's interesting to see gold seems to be the most decisive mover here so far. NAS down just a bit here off of this as well. Dollar showing some strength, perhaps some stickier than expected inflation numbers. Let's keep tabs on this and see where we're at with the numbers here this morning. Gold down back to 1946, and let's go see where we're at. We have our pending number coming through, and of course we're just getting this flashing pending number until we get a decisive move there. And look at that, gold just tanking here. 0.4%. Okay, thank you guys. 4.4% higher than expected. Core PCE numbers. What is this showing us? Well, it's showing us that in terms of the consumer spending, consumer inflation, we are seeing some sticky spots that continue to be a focus for the Federal Reserve. This is why we are seeing some dollar strength, right? As this potentially increases the likelihood that at some point the Federal Reserve will need to remain hawkish, right? Need to remain raising rates, or at the very least, keeping rates higher for longer, which is the sort of sobering thought, I guess, for a lot of investors, a lot of people who are trying to go long gold. Higher for longer rates is, of course, going to suppress the price of gold. It's going to push the dollar up. And NASDAQ catching a little bit of a sell-off here this morning as well. I wouldn't say it's a substantial one on the NAS specifically. It seems like, this thing has a lot of contributing factors. But this gold chart, man, 1945 printing here as we get going with the stream.
Did you know our market scanning software, the EdgeFinder, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EdgeFinder not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EdgeFinder at a discounted price when they use promo code A1YT. You can check out the EdgeFinder with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Kenzo, we had core PCE numbers come out this morning, and it caused some market volatility. We saw gold slip to the downside yet again. Seems like this recovery here suppressed a little bit,
Yes.
beat up a little bit from this core PCE number. What's your reaction to it? And I guess, what are you watching here this morning?
Actually, this week I was actually on gold and also US30 and NASDAQ. So on gold, things were actually going very nice because we actually were continuing with that downtrend. And here, after the news, actually, the market started to push a bit lower. I did not check those news, but with the structure, it showed me that actually the market was actually retesting around this resistance, which was actually a support before. So I'm still expecting the market to push a bit lower. And another big thing actually on other side, like on NASDAQ, we saw that Nvidia actually, they reported some very good results, actually earnings. That's why we saw a push to the upside. And if you know, Nvidia is not actually in US30. That's why US30 was not actually doing good. So I think US30 is also focusing on a debt ceiling, which they did not actually complete that. I think maybe it's gonna be next week, Tuesday, I guess. So we just hope that they're going to get a solution for that. And if not, it's where we're gonna see maybe things start to change. You see?
Yeah, I was gonna say that. So the Nvidia, it's an interesting chart, of course. With the Nvidia pop, the Nasdaq followed right off of the AI kind of craze, as well as just forward guidance looking really good for the company of Nvidia, right? The chip manufacturer, of course. When it comes to this AI hype that's going on right now, a lot of tech companies getting involved with that. A lot of demand for chips has surged yet again. Semiconductors in their general nature are somewhat of a cyclical thing, meaning that of course you know this, but for the newer people in the audience, semiconductors, the things that make chips inside of computers, airplanes, cars, everything, right? They have rising and falling demand depending on what's going on in the world economy, because of course, if the economies of the world are growing, more chips are required, right? Nvidia, of course, very much, is a cyclical company by that very nature. But Nasdaq has benefited pretty tremendously. You've got the Nasdaq chart pulled up. I've got a long trade open. Your chart though that you've got there, Kenzo, the low of your trend line, that recent retest of your trend line, is drawn almost exactly the same way that I have mine drawn. I'm bullish on Nasdaq. I'm holding a position, trying to trail a stop going into next week. Where are you at with? Are you looking to get into a position or find a trade setup on this, or what do you think?
Yeah, actually, we are already on a trade. This one actually is the one actually today, but yesterday we had and we was a bit lower. But still, since we were actually around this resistance, the market did not really push that much. But I still believe that the market can still actually continue pushing up, as all those tech companies, as you were speaking about the AI, everything is starting to get better and better. And it seems like every company is going to invest in those AI. So everyone is looking these companies in a different way. So, and that actually will, in few months, obviously, we're going to see the market pushing higher and higher. So, and it also confirms with the structure. The structure says that we are in up, and I still believe that maybe we are actually on a beginning of this maybe uptrend. If you check, we still have a long way to go. The previous high was around 17,000 or 16,000. So where we are now, we are actually in the middle. So it means we can still have another room for us to reach this area. So, and as the things are still very positive, I still think we can still push. Everyone is still investing in AI. I saw also JP, I think it's JP Morgan, the bank, they also trying to invest in AI for their banking sector. So it means like AI is now taking shape, and which means those companies, they can seriously benefit.
Right, and that's the thing, is as more and more companies try to gain exposure to the efficiency opportunities of artificial intelligence softwares, artificial intelligence technology, it creates rising demand for a lot of industries that have ripple effects. So it is an interesting thing. One thing to note too, Kenzo, is yesterday, I don't know if you caught this, but you had the SPY and the Dow make some moves to the upside, but it was really the Nasdaq that just kicked everything else's butt, right? The Nasdaq was just killing it. Meanwhile, here is the S&P 500 for those of you watching it. Yes, it's up off the recent lows, but Nasdaq, remember, is breaking through the highs. Nasdaq is killing it in comparison, especially when you look at, of course, the more value-oriented index of the three. You've got the Dow, which is barely off of its recent lows. So it's very interesting to see that divergence when we talk indices. Let's also pivot and talk a little bit about currency pairs for a moment, Kenzo. I'd be curious to get your take on perhaps this dollar move recently. We talked about this last week, I believe. We were both a little bit hesitant on the dollar. I have not been long on it. I've been if anything, somewhat confused by the move as we discussed last week. Do you have any updates in terms of the dollar? Where are you at with it? Are you also confused like me, or do you kind of understand this bullish trend that's going on?
On the dollar, to me, the understanding, I can say it's because of the debt ceiling, because if they say they're not, because before say that they're not going to allow to increase the debt ceiling, so that makes the dollar way too attractive. But at the same time, that can hurt the US economy, because if they're not going to increase the debt, it means they're not going to increase like extra cash that they're going to just print. So it means dollar is going to get stronger, but at the same time, it's not actually good for the economy, because they're not going to able to pay other things that they're supposed to pay, like military services and stuff like that. But it makes it valuable because it's not enough. They're not increasing the debt. But if they increase the debt, obviously it means they have too much to pay. So I think that will change after we hear what will happen actually next week. If they agree with that, obviously dollar is going to actually lose this value and start to push up again. I mean, euro and the other ones, they can start to push up. Another thing is, it seems to be obvious that maybe they're going to increase the rates. That might also be something else. I think they're going to increase interest rates, maybe for the last time. And it seems like the market is also agreeing with that, because it's been like pushing lower as it expects the Fed to increase the rates. So we have enough economic news along the way, but mostly we will end up getting confused. But I think they actually agree with the fundamentals. If they increase the rates, obviously the market has been showing us that the dollar is getting stronger because the rates, they're going to go higher. The debt ceiling also not that much, but if they not agree with that, obviously we might see a pushback. But also a few weeks ago, maybe the rates might go higher. If not, that will be another sign that, okay, maybe we can have another nice reversal. If they don't really increase, obviously for us it's going to be fine, because we can hold longer on your Euro USD or any other pair which goes with a dollar, because it's going to be obvious after those fundamentals. But for now, we're just guessing. We don't actually know what we're doing, but yeah, we just have to flow with the market.
There's a lot to the fundamentals, as you just mentioned there, and it can be at some point even overwhelming. There's so many factors. Like you just said, inflation has been cooling in the last year. However, now there's this new contingency where it's like, well, inflation has come down off of, I guess, that top half of the 10 or the 9% inflation that we had in the US came off relatively easily, because a lot of it was truly, genuinely transitory. But then you have this stubborn inflation where it's like the core number just doesn't want to budge too much. And now it's like, oh, does the Fed just need to keep going and really hurt the economy, break something a little bit in order to get further decline in inflation? So there's a lot to it. I think, you mentioned some things there, Kenzo, that about the dollar specifically. The dollar strength right now is what is in front of us. I'm not necessarily, now I'm not a dollar bear at this time, because again, I'm waiting for structure to break back the other way. And some of those stories that you mentioned, that could lead to dollar weakness, the debt ceiling problem going away, so on and so forth, for those to appear in order to start trading the dollar to the downside. But there is a case to be made that currently in front of us, the dollar is very strong. It makes sense why it is strong for now. That story can play out longer than you and I are thinking that it could. It could potentially, be something that sticks around and stubbornly is a part of the next couple months. So perhaps in the short term, I've mentioned that the dollar strength seems to be here for now. The gold market for day traders and swing traders, I would say if you're looking at it from a purely technical perspective, lots of traders in the audience are asking for gold here. We talked a little bit about gold earlier in the stream, but to come back to it, gold at levels of resistance like this, right now it has a lot of headwind. There's a lot of dollar strength here. And until we see something to the contrary for this dollar strength, I think the path of least resistance for gold, for silver in the short term seems to be down.
I'm liking it at this trend line right here. I don't know if you have it. Okay. Yeah, so this long-term trend line since 2022, it's finally up against it. Well, it bounced on the day, but it got very close. I think I was saying a couple days ago that I like gold in the 1940s, and I think it went below that, but it's like super close to that trend line. I'm not really sure, how if it's like a confirmation that it will stick, obviously, but I think it's been respecting that zone for a while, so I think it's at least worth an attempt if we see a test there. But we could also see it break right under and touch into the like 1800s again. So
Frank, on the gold trade, what would have to happen, obviously fundamentally, to give some lift? You're looking at the daily chart, so this is a longer term level, and that is a genuinely a pretty strong level of support. It will be interesting to see how that support, how price reacts to it. Currently showing already a little bit of signs of reaction there. What would have to happen fundamentally? We got core PCE numbers came out higher than expected here this morning, showing yet again stubborn inflation. What would have to happen for gold to have a turnaround point on the fundamentals side?
so that's a good question. I think what we need to see is more or less mixed news from the Fed, because they seem to be torn on what they want to do with interest rates. They redacted the statement that there was a need for one in June, but at the same time there's debates going on, and it seems like the committee is mixed, and that's definitely taking a toll on gold because dollar is just absolutely spiking. Also, bond yields, they're finally kind of catching up to the dollar, and if what we need to see, I would think, is if bond yields could come down, but it's not looking likely that they'll do so. So gold is going to have to see some weakness in the dollar, and that's going to have to come from better economic news, and then
Like,
even the Fed meeting minutes was not promising for either side, but in times of uncertainty, they're gonna definitely gear towards the dollar for sure.
yes, yes. And plus, next week we have NFP. That might also change things. We have unemployment claims and also NFP, and we know how gold reacts on NFP. Maybe the way you're saying that we have a support on the lower side, I also see that zone. The market might, maybe, let's say, maybe if the dollar is gonna get weaker, maybe the market might push lower just to retest there before maybe we see another push. Maybe that might happen. Or maybe if the dollar is getting stronger, it's where maybe we're going to see a continuation of that bearish momentum.
Yeah, Kenzo, and Frank also talked briefly a second ago about bond yields rising. For perhaps the newer traders, you and I, just briefly before Frank joined us here, we were talking a little bit about the debt ceiling. Is the debt ceiling the primary driver on the rising bond yield? Of course, a rising bond yield for the newer people in the audience, rising yields generally means falling bonds, right? They move inversely to each other for the most part. Do you think the debt ceiling is putting any pressure on the yield right now? Is that what is the primary driver for us, Kenzo? What do you think?
Yes, I think they are obviously directly obviously affecting each other, because when we talk about the government, obviously, first thing first, it's bonds. If maybe they can't actually able to perform some other transactions, it means they are the first ones to be affected. So if now you're saying the bonds are going up, it shows the pressure actually, or maybe that there's something happening that we don't only see. They seems to be very close to a closure for that debt ceiling, which means they might have some good news. Maybe that's why we see things starting to get back to those positives. But once the bonds goes up, or the bonds goes up, mostly we're gonna see the likes of USDTs and Nasdaq falling. So that is going to be another thing also. So we just need to check that closer. I did not actually check about the bonds, but yes, if the government doesn't really perform very well, it's where things they're going to actually change or affect everything that we see now, you see.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.